Hearty welcome to Wednesday Study Circle Meet. Today we have selected a most important topic, a practical topic and a relevant one for the practicing CAs. Best practices in GST 9C filing is the topic. To enlighten us on this topic, we have invited an expert in GST, CA Mahadev R. May I request branch chairman to escort the speaker on the dais and also welcome him with the floor topic. Ladies and gentlemen, please join me to welcome him. Thank you, Chairman. Friends, it is my pleasure to introduce CA Mahadev R to this August gathering. CA Mahadev is a partner at Hiragange and Associates, Bangalore. Presently is heading Audit and Compliance Division at Hiragange Associates. Recently he authored a book on GST for BCom course, Bangalore University, and co-authored a book, A Practical Guide to GST Audit and Certification for Bloomsbury publication. He is an active contributor of articles to Karnataka State Chartered Association, CA Club, GST Law, Times and Hiragange Academy newsletter. He is a regular speaker at KSCA and in Bangalore branch and in many other places in Bangalore. With this brief introduction, I present CA Mahadev R before you. Please join me to welcome him once again.
First, I would like to thank Shetty sir for the wonderful introduction, and my second thanks to you. In spite of being evening session, in spite of being knowing that you don't have a CPA credits for this, I'm sure all of you know that there is no CPA credit for this. Anybody by mistake who has come assuming that there is a CPA credit? I hope you will be there till the session end. Yes. Thank you. See, already a lot of discussions have started now. Yeah. The topic which has been given to me is best practices in audit. So when we say audit, it is GST audit. Before understanding the best practices, I think we have to understand the GST format. Am I audible? The coverage will be understanding the important legal provisions, understanding the fields of certificate, and understanding the best practices in GST audit. What is audit? Don't read that. This is to check only CAs have attended here. What is audit? You don't know, or you don't want to answer, or you want me only to answer. What is it? What is audit? General meaning, I am not saying you have to tell as per GST law. I will not continue if you don't answer.
Verification of records.
Thank you, sir. Yeah, verification of records or returns which are maintained under a particular law. For what purpose? It is to express an opinion on the financial statement. This is the general understanding which we have on the audit. If you refer to any taxation law, wherever the audit has been made mandatorily, so there will be a meaning for the term audit. So in GST law also we have a meaning for the audit. So it says audit means examination of records, returns and other documents maintained or furnished by the registered person under this act. Which act we are talking? GST law. Or rules made there under which rules? GST rules. You have to be participative, otherwise it will be boring for me also. Or under any other law for the time being. To verify the correctness of turnover declared, you have to prefix GST before all these words. So it is GST turnover declared, GST paid, GST refund claim, GST input tax credit and to assess the compliance under GST law. So what is the importance of any other law? What do you think is the importance? I have around 45 slides. So if you answer me first, I can finish first. So what is it trying to say? So it is saying that as an auditor, so who can do the audit under GST law? Sorry? Chartered accountant or cost accountant. Can department do the audit? Departmental officers? Yes? Yes. So this audit definition is applicable not only for chartered accountants or the cost accountant. This audit meaning is applicable even for the departmental officer. So even when the departmental officer comes, you can't say that his scope is restricted only to see the GST related records. If he feels that there is any records or returns which are maintained under any other law, what can be the example of any other law? Income tax law. So one example in income tax law could be your Form 15 CA or Form 15 CV, wherein we will get the details of the payments made in foreign currency. So what can we make out from these forms in GST? What can we make out? Sorry?
Payment against imports.
Yeah, payment against imports. We can see as an auditor, I can check if there are any payments which are made for the services which are liable for GST under reverse charge mechanism. Correct? So as an auditor, whether it could be a CA or it could be a departmental officer, he can go even beyond the GST records. So as an auditor, you cannot restrict your audit or verification only for the GST returns or GST related aspects. It has to go beyond GST law to ensure that the turnover declared, it cannot be for any purpose. It has to be for the purpose of ascertaining these 5 elements. What are these 5 elements? Turnover, taxes paid, refund, input tax credit, and to assess the compliance under GST law. If there is any record which is not at all relevant for ascertaining these 5 items, that is not important for us to verify in the GST audit. So this is the importance of understanding the meaning of the term audit. Aggregate turnover. I am sure most of you would be knowing the answer. So aggregate turnover means aggregate value of the taxable supplies, excluding the payments which you make under reverse charge mechanism. Exempt supplies. Exempt supplies includes nil rate, exempt by notification, and non-taxable supplies. What can be the examples of non-taxable supplies? Petrol, diesel. In many of the forums, the first answer which I get for this question is alcohol. Yeah, alcohol is also a right answer. Alcohol and petroleum products. Export of goods, interstate supplies of persons having the same ban. It is basically covering your stock transfer cases. So aggregate turnover include almost all types of supplies. Any doubts in this? No? Can't say? I thought it is going to be a tougher session for me. You are making it dead easy for me.
In future it will be.
Sorry?
In future it is going to be tough.
Thank you. Future is today only, right?
Yes.
Thanks. Yeah, I have a doubt here. What is the turnover level for GST audit? 2 crores, correct? So my turnover for 2017-18 is 2.5 crores, out of which 75 lakhs is from sale of land. So I have a question for you, you being a chartered accountant, so I want to know whether I should get the audit done under this GST law.
Yes.
No?
Yes.
No means why no? Or you can also answer why yes.
Including exemplary sales.
Your answer, sir. Why no?
Schedule 3, neither not a supply.
It is not supply of goods or service. Correct. If you see here, everywhere they use the word supplies. And sale of land is covered under Schedule 3. If you see the heading of the Schedule 3, it says, following are the transactions which will not be considered as either supply of goods or supply of services. So in case of the Schedule 3 items, we need not consider that for the purpose of compute in this 2 crores limit for the audit. And it has to be computed on pan-India basis. If I have 25 branches and my turnover is say 8 lakhs in each of the branch, so should I get the audit done for all branches or not required because it is less than 2 crores? It is required, right? Because it has to be seen on pan basis, it is not branch basis. Section 35(5) and Rule 80 sub Rule 3 is the provision which requires a registered person to get the audit done under GST law. It says every registered person whose turnover during the financial year exceeds the prescribed turnover limit shall get his accounts audited by a chartered accountant or the cost accountant. So here we have to understand what is the meaning of the term accounts, because there are so many audits which will be done in case of an entity. So it could be audit under income tax law, there could be audit under Companies Act, there is a SOX audit, there are so many audits which will be done. So in GST law, the question for us being a chartered accountant, if we are hired for the service, so to what extent we should verify the records? To understand this, we have to understand the term accounts for GST law. We will see that. And shall submit copy of the audited annual accounts, reconciliation statement under 44(2), which is nothing but your form GSTR 9C. Such other documents in such form and manner as may be prescribed. So as on today, there is no other document which has been prescribed. The only documents which are required is your audited annual accounts and GSTR 9C. What is the scope of audit? Is it limited only to reconciliation of the values between our financial statements and the annual return? We don't know the answer very clearly. So recently, on July 3rd, there is a press release which has been hosted on the CBIC website. So it says that the scope of the audit is very clear in GST law. At least I was not clear, even though I am not clear. Then it says that the role is limited to reconciling the values between your annual returns and financial statements. If that is the case, it becomes match the following. So you will have 2 records, you will have annual returns, on the other side you have financial statements. So you have to see, is it 100 as per financial statement, is it 100 as per annual return. If it is not matching, you have to ascertain the reason for such difference. Is it the scope? It is not very clear. I feel that that is not a clear scope. We will discuss that in subsequent slides. Rule 83. So Rule 83 we should refer to understand what is the prescribed turnover and what is the format in which this form has to be filed. So it says every registered person whose aggregate turnover. If you see, there is a difference in the words which I have used. So in the section they have used turnover, in the rule they have used aggregate turnover. So we need not break our head to say that there is a conflict between these 2 laws and we should not get the audit done. Even these types of discussions are also there. We need not enter into those types of discussions. So we'll assume that this is aggregate turnover, which is 2 crore limit. During the financial year exceeds 2 crore rupees. If it is equal to or less than 2 crores, no audit. Registration wise, shall get his accounts audited in as specified under section 35(5), and he shall submit audited annual accounts, reconciliation statement in GSTR 9C in electronic form. We understood that the account should be audited by a chartered accountant or the cost accountant. So now we have to understand the meaning of the word accounts. They are not defined what is accounts, but if you refer to section 35, it says the heading is accounts. So it says every registered person shall keep, maintain at his principal place of business. Where do we get this information? Principal place of business. Registration certificate. In every registration certificate, in every state, it is mandatory to have one place as principal place of business. So if you refer to any registration certificate, there will be a one address which will be a principal place of business. So when we take up the audit, we have to see, we have to understand what is the principal place of business in a particular auditee's case. Because there could be say 10 branches within the state. So we will not know in which place record should be maintained. The law says all this record should be maintained at the principal place of business, which is mentioned in the certificate of registration. A true and correct account of production or manufacture of goods, inward, outward supply of goods or services or both, stock of goods, input tax credit await, output tax payable and paid details, such other particulars as may be prescribed. If you see the list, it is very, very small. So it has 5 plus 1 item. But the risk is in Rule 56, 57 and 58. There are 3 rules which prescribes such other particulars to be maintained by a registered person. So if you see the law, there is a list of around 3 pages containing the list of records to be maintained by a registered person. So it says, the law says, accounts to be audited. So as an auditor, I have to see whether these records have been maintained. So I should see 35, which has this 5 plus 1 item. Then I should also see Rule 56, 57 and 58 to understand the other records which have been prescribed under the law. Yes, sir.
Yes, sir. Stock of goods. So I have a doubt. Sale of consumables. It is not a trading item, it is a balance sheet item. So what is the GST treatment? Whether it is a part of turnover or
A part of?
turnover? See, my question is, goods are not in the nature of trading, regular trading. It is not a P&L item.
Okay.
It is a balance sheet item.
Okay.
So if you the 2 crores turnover is there, aggregate turnover, is it part of that turnover?
No, it is not considered. See, turnover is, it should be turnover as per GST law. So you have to see the items or the income on which you are supposed to pay GST, or the incomes on which there is an exemption, plus stock transfer. This consumables being in stock, it is not a turnover. As I said, there is a list of around 3 pages in the GST law. I have listed some of the important records which are almost common in any types of industry. Please don't discuss internalism. For me, problem is I buy out many things. In between, if there is a person who is talking, I will forget everything. So again, I have to start from A. If you ask me what is the alphabet after E, I have to start from A only. I can't say it is F. Books required under Rule 56. Accounts of goods or services imported or exported. We don't have any complications in this. Supplies liable for RCM. RCM is reverse charge mechanism with relevant documents. So what are the relevant documents for reverse charge mechanism? In GST law, what are the records to be maintained? Invoice, payment, voucher, yes. You are saying invoice issued from the supplier or the any other invoice? Self-invoice, correct? So in case of reverse charge, 2 documents are mandatory. So one is self-invoice. When do we get self-invoice? There can be 2 possibilities in reverse charge mechanism, correct? So one can be section 9.3 which says that in case of specified services or goods, the recipient has to pay taxes. Section 9.4 was there for first 4 months. We are doing GST audit for 2017-18. So we should note that there was section 9.4 also for first 4 months. Section 9.4 says that in case of procurements from unregistered persons, the registered person has to pay the taxes. Now question is, should we have self-invoice for both the sections or any one section? Which section? 9? 9.4. The answer is partially correct. It is required for all 9.4 cases because 9.4 is only covering the cases wherein I procure the goods or services from an unregistered person. But the law is self-invoice has to be there when I procure goods or services which are liable for reverse charge mechanism from an unregistered person. Even section 9.3 can cover procurement from unregistered person. The example can be VRL logistics. So if you get a GTA service from VRL logistics, you don't have to raise self-invoice. Why? Because VRL Logistics is registered under GST law. There is some RR Transport. He is not registered under GST law. You are procuring service from him. It is covered under section 9(3). Though he is unregistered, still you have to pay the taxes. And you should still raise the self-invoice. So self-invoice is required for 9(3) as well as 9(4). The only difference in 9(3) is you should raise it only when you procure the services or goods from an unregistered person. Payment voucher, is it for one section or both the sections? Both? Yes. Payment voucher is required for 9(3) as well as 9(4). Whether registered supplier or unregistered supplier, it doesn't make any difference. So the law says, in case of reverse charge mechanism, we have to maintain the records along with relevant documents. In this case, it is payment voucher and self-invoice.
So self-invoice is required for legal services also?
For?
Legal services. Question.
It is required, sir.
Self-invoice.
Yes, yes. If you are procuring from an unregistered person, self-invoice is must.
But he has given the invoice.
With the tax?
No, without tax.
That means he is unregistered. See, we are raising self-invoice. The intention behind the provision of self-invoice could be to create a basis on which I can take the input tax credit. To take the credit, one of the condition is I should have a tax invoice, correct? So if it is from an unregistered person, I will not have a base for taking the credit. Earlier, if you refer to the Senmar credit rules, there was a provision which said that if you have a challan through which you have made the payment under reverse charge mechanism, you could have taken the credit. But now only the document which has been specified is bill of entry or debit note or tax invoice. I think that is the intention with which they are asking us to raise a self-invoice so that we can take the credit based on the self-invoice. Invoices, bill of supply, delivery challan, credit note, debit note, self-invoice we have covered. Receipt voucher and refund voucher. So where do we have this receipt voucher and refund vouchers? Sorry? Advances, yes. The law says if I am receiving any advances towards a taxable supply, I should issue a receipt voucher. There is a format which has been given for the receipt voucher as well as the refund voucher. When I am returning this advance amount due to non-providing the service or not supplying the goods, I should also issue a refund voucher. So as an auditor, I should see whether all these compliances have been done or not, because you are auditing the accounts maintained under the GST law. So you can't say these are not relevant and I don't see this at the time of audit. So we can't say that. And there is a particular line in the certificate also wherein it says that whether the registered person has maintained all the records which are prescribed under CGST law or GST law or SGST law. So therefore we should know all this. Then it says we should have stock details of inward, issues, outward details, lost, stolen, destroyed, written off, disposed as gift, free sample, scrap, wastage. Most of these words we have seen somewhere. Input tax credit, right? So section 17(5) covers some of these entries, which restricts the input tax credit in case of goods lost, stolen, destroyed, written off, etc. So the law requires us to have a ready-made register for the purpose of verification by the auditor. Name and complete address of the suppliers. Yes.
In case of scrap or fixed assets, with no consideration. So what is the treatment in the GST law? Scrap or fixed assets without consideration.
You have to refer to Schedule 1. Schedule 1 first entry says permanent disposal of the business asset, wherein input tax credit has been taken. So you have to see if you have taken input tax credit on this item before it becomes scrap. If you have taken input tax credit, even though there is no consideration, you have to pay taxes. If there is no GST credit which you have taken, then you don't have to pay anything, because supply, the general meaning is there has to be a consideration.
So no input tax is taken.
Then answer is no. Name, complete address of the suppliers. This we get it very easily, because if you see the supplier invoice, there will be a address. It also says we should have a complete address of the customers. There could be few industries wherein the customers' details may not be there, but luckily the law says wherever required under the law. If you see the invoicing rule, the rule says that we should have complete address of the customer wherever the value of the invoice is crossing 50,000 rupees. So we have to see wherever the value is crossing 50,000, whether the addresses have been collected or not. Complete details of the places including documents where the goods are stored. I should have a register wherein I can know the places wherein I have stored the goods. If I don't have any records wherein I can prove that these are all the addresses wherein the goods have been stored, then it will be deemed to be a supply wherein there can be a GST demand along with interest and penalties. Entries in registers, accounts, documents not to be erased, effaced or overwritten. It appears that this is applicable mainly for manual registers. If you are maintaining the register in Tally or Excel, I don't think you can have a control on all this. There will be so many entries which are going to erase, right? There will be no trace also. Incorrect entries scored out under attestation. Manufacturer to maintain monthly production accounts. No difficulty in understanding this. Service providers to maintain details of the goods used in services. So this is a bit tricky. So I am a chartered accountant. So what are the goods which I use in providing my CA services? Stationery, computers, laptops, fans. There are so many things. Softwares. The law says, being a service provider, I should have a record of the goods which I have used in providing these services. We don't know to what extent we should have these details. Any manual book to be serially numbered. Generally this is not applicable nowadays. And there are some requirements whenever we are maintaining the records under electronic form. So these are very, very important. It says if electronic, maintain log of every entry edited or deleted. I am sure most of you must be using Tallies or Excels. I am sure you have the log of all these entries which you have edited. Do we have? No? What do you think the consequence of not meeting these requirements? Yes, sir. What is the consequence? What can be the consequence?
Tampering of evidence.
Huh?
Tampering of.
Okay. What is the ultimate result? So, what is the impact on me being a registered person? I have not maintained all of these records or few of these records. So, what can be the consequence? Sorry? Yeah, there is a penalty of 50,000 rupees. If you see, there are many events for which they have specified the penalties, and there is a residual entry which says that if there is any deviation in any provisions of the law for which there is no penalty specified, then the penalty is 25,000 rupees under SGST law, 25,000 under CGST law. But they are not said whether this 50,000 rupees, say there are 100 unregistered procurements in 2017-18. Is this 50,000 for one payment voucher or 100 payment voucher? It is not clear. It is not clear whether this 50,000 is for all the non-compliance put together or payment voucher 50,000, receipt voucher you are not maintaining 50,000, self-invoice you are not maintaining 50,000. So we don't know. It depends on the intelligence and discretion of the departmental officer. You have observed there are a lot of news also. If you don't display your registration certificate or the registration number, so they have already started levying penalty of 50,000 rupees. So you may ignore that. Most of these rules are there even in VAT laws, correct? If you had observed, most of these requirements are there in VAT laws also, but it was not so strict. But nowadays, you know that the revenue of the departmental officers are dried up. So you have to be ultra cautious. We can't say, again sir, one register maintain modula stage, so he will not question. So that attitude should not be there. At least as an auditor, we should inform the assessee that this is the rule and this can be the consequence. So if you don't have log of entries edited or deleted, so officer can say that you have to pay 50,000. If records are electronic, then authentication by digital signature. Most of our registers are Excel, Word. Is it digitally signed? No? So how many 50,000? So you don't have payment voucher, you don't have log of entries edited or deleted, we don't have authentication in digital signature, so already 1.5 lakhs. Assuming that this 50,000 is for whole bunch of proper backup needed, even if they say you don't maintain, we will have this. On demand, password of files, explanation for codes to be provided, detailed record of stock to be maintained at godowns, warehouses as well. As I said, there is around 3 pages list. What I have covered is only the common register which are applicable for almost all types of entities. So you have to go through rule 56, 57 and 58 to understand the detailed requirement. For example, if you are doing the audit of a construction company, so for works contract there is a specific requirement wherein certain records to be maintained. I am sure this can be the first question which most of the assessors ask us. If you don't file audit report, what is the consequence? GSTR 9 is an annual return for which there is a late fee of 200 rupees per day, and it can go up to 0.5% of the turnover within the state. So for every 1 crore rupees, the penalty can be 50,000 rupees. It can go up to 50,000. If it is 100 crore, it can go up to 50 lakhs. But again, whichever is maximum. Next is failure to file the audit report. So as I said, there is a residual entry which says that if there is a non-compliance of any of the provisions under the GST law, there is a general penalty of 50,000 rupees. Failure to file 9C report, there is no specific penalty. So we can assume that this is 50,000 rupees. But again, as you know, GST law, it is not very clear. There are a lot of interpretational issues. The problem for people like us is, even though it is very clear with the intention, we will try to find some interpretation issue in this. So when I was saying this, I found some interpretational issue, so you don't have to worry about that. One possibility is, if you refer to section 44(2), it says, wherever the audit report is mandatory, the annual return has to be submitted along with the audit report. If you don't file annual return, then there is a penalty of up to 0.5% within the state. So department can say, in your case audit is applicable, so you have filed only annual return, you should have filed annual return along with the audit report, therefore general penalty is not applicable. The penalty applicable in your case is, it can go up to 0.5% of the turnover within the state. This can be possible. Remember, the revenue of the department has dried up. UDAN, this is general information. Generating this UDAN is mandatory for, now I think as on today it is applicable for all types of certification. For GST audit report, it was made mandatory from April 2019. Is it mandatory to quote UDAN on the certificate? The format does not require us to mention that. I think there is a representation from the ICA to provide on column for mentioning this UDAN, but as on today it is not required. But we should generate this UDAN and we should have it in our record. What if it is missed? So they have given a time limit of 15 days. So you are filing the GSTR 9C today. Within 15 days we can generate this UDAN if you have missed it. Whether any partner can generate, say there are 15 partners, I do the audit and there is another partner who will generate the UDAN. Whether it is acceptable? Is it acceptable? Okay. As per the guidelines, it is not acceptable. The person who is going to sign the report has to generate the UDAN with his membership number. So, any doubts in whatever we have discussed? each.
CGST is a 0.5% and again.
No, it is 0.25% in SGST, 0.25% in CGST. Total is 0.5%.
So any penalty is there for non-filing LUT for export sales?
We'll limit the restriction to 9cc. I'll answer it after the session. No penalty. Yeah. The option of a consolidated invoice was given in case of section 9.4, sir. Yeah, 9.4 it was given. It can be done also. But payment voucher has to be invoice wise. There is no concept of consolidated payment voucher. So shall we proceed? Can I assume that you have understood everything? Yeah? Few people are not looking at me also.
So point number 4.
I will cover that, sir. From first I will cover. Remember, this is done by me. So I will assume whatever has happened with me is the right thing. Yeah, some of the features of audit are annual return. Additional liability can be discharged through annual return. See the difference, main difference between annual return and audit report is, in annual return we will not report any qualifications or the observations in the annual return. Whereas in the audit report, that is your 9C form, the auditor has to mention the qualifications or the observations. So what is the consequence of mentioning these observations or the qualification? So the department can straight away take the issues and they can issue the show cause notice demanding the taxes or the penalties. Example, you are the auditor, so I told you that the audit definition says that we have to assess the compliance also. If you see section 35.5, it says that accounts needs to be audited. So we have understood the meaning of the accounts, which includes maintenance of various registers, payment vouchers. You observe that as an auditor, you observe that your auditee or the client, he has not maintained self-invoice, he has not maintained payment voucher. Then what you should do? So as an auditor, you should mention that this auditee has not mentioned payment voucher, self-invoices are not maintained, receipt vouchers are not issued. So then what happens? Department straight away they get a case to levy a penalty of 50,000 rupees. Again, we don't have an answer whether it is for each mistake or as a whole bunch of mistakes, correct? Similarly, there can be other liabilities also. So if you feel that there is a genuine liability, then we should take annual return as a basis. In annual return, we will declare the correct turnover and discharge all the liabilities so that our audit report can be clean. The observations can also be reduced. So if you are helping the auditee or the client in doing annual return as well as audit report, then you should tell them that all these are the requirements under the GST law. So if you don't have this receipt voucher, there can be a possibility of levying penalty of 50,000 rupees. So still you have the time, you generate the self-invoice or you generate the payment voucher and keep it ready. This can be your advice. One more bigger advantage of filing a correct annual return or correct audit report is limitation period for demanding the taxes or the interest and penalties. There is a section 73 and there is another section 74. Section 73 is for issuing the show cause notices wherever there is a short payment of taxes or wrong credit or wrong refunds. It says that when there is no intention, when there is no suppression of facts, the demand can be only for 3 years from the date of annual return, due date of filing the annual return. If it is with an intention of evading the taxes or you have suppressed some information, then this limitation period can go up to 5 years. So straight away you have advantage of 2 years if you declare correct details in your annual return. Increased burden of service providers. Before GST law, so service providers were enjoying, so there was only one service tax return every 6 months, so yearly only 2 returns. Another advantage is For pan-India basis, you had the option of filing only one registration. So there was a centralized registration concept wherein you had to file 2 returns in a year. Whereas for the trader or the manufacturer, there was a requirement to file VAT returns, there was a requirement to file excise returns, there was a requirement to file service tax return also if there is a small service which has been being provided. And it is registration wise. Each state there was a requirement to file VAT returns. For each unit there was a requirement to file excise returns. Now GST law has made everybody equal in the compliance. So one nation, one GST, one compliance. So even service providers are required to file monthly returns and the compliance has got increased. So whoever had the centralized registration, even they have to file annual return for each registration. They have to file audit report for each registration separately. So this has increased the compliance burden on the service providers. Fourth point, more opportunity. This can be the one reason, right? So earlier you were filing only one returns. For one, say you had Airtel as your client, and there was only one registration. Now you have how many? Minimum 29. So this is why I have written more opportunity for the professionals. And there are a lot of other ways also. Say that most of the clients were fixed for some professionals. Say I had 10 clients with me. Now because of GST, so they have changed the consultants. Even we have got different clients, correct? So actually there was a more opportunity for the professionals. Only thing is you have to prove them that you know GST law. Contribution to nation building with right advice. So as a chartered accountant, so it is my duty to ensure that I advise correctly to my clients to pay the correct taxes. There can be a lot of interpretation issues. So wherein I don't have to force him to pay the taxes, but there can be issues wherein the liability is very clear. Sir, you know that the tax rate is 18%, but the SSA is paying 5%. It is very clear from the notification also. Then I should not advise him to wait till departmental officer come for identifying this issue. So as an auditor, it is my duty to advise him that the correct rate of tax is 18%, and in my report also I should mention that the rate of tax has been considered as 5% instead of 18%. We'll understand the format now. The parts of reconciliation statements. There are 2 parts into this 9C form. One, we have a reconciliation statement which requires us to reconcile the gross turnover, later on taxable turnover, then reconcile the taxes paid, reconcile the input tax credit between your annual returns and the financial statements, and the last part is recommendation to pay any additional liability as a result of non-reconciliation. And next we have a part B, which is a certificate wherein I am going to mention the auditee has maintained all the records or he has not maintained certain records, and these are the observations of the qualification subject to which I am reporting that the information in 9C is true and correct. Understand, what we are certifying is true and correctness of the information in 9C. It is not true and fair. So the basic steps, it is not a rule, but with our experience we felt that these can be the basic steps which are important to proceed with GSTR 9C. Start with reconciliation. I think this is the important requirement, whether you are filing annual return or audit report or both. The first requirement is to get the reconciliation done between your books of accounts, GST records. In GST records, it is GSTR 1 and GSTR 3B, so that you can make the relevant adjustment in your annual return so that there are lesser observations or qualification in your GSTR 9C certificate. What are the important items to be reconciled? One is turnover, the next item is input tax credit. Ascertain the reasons for the turnover. The reasons could result in additional liability or it need not result in additional liabilities always. Say there is a difference in the turnover which I have declared in case of exports. So there is a difference, but it doesn't mean that there is a liability for this difference. there is a taxable supply which I made within India, then there could be a liability. So first we have to understand the reasons for the differences, then we should see whether there is a liability or not. Similarly, even in case of the input tax credit, I should say whether is it as a result of lesser credit which I have claimed, or is it because of excess credit. If it is excess credit, I have to pay back the credit. If I paid extra taxes, then there could be a possibility of claiming the refunds also. ITC claimed extra, the time limit is lapsed, but still recently there is a High Court judgment in case of Gujarat, AAP and Co. Chartered Accountants. So they have made a representation wherein the Gujarat High Court has held that GSTR 3B is not a return. GSTR 3 is a return, therefore the due date for taking the input tax credit is the due date of filing the GSTR 3 return, which is not yet specified, or the annual return, whichever is earlier. So there is a view that based on this decision, if we have not filed our annual return, even now we can take the input tax credit for the period 2017-18. Don't assume that this is my final view or the decision of the High Court is final. It is going to go to the Supreme Court. We have to wait for the outcome. Only if the SSA is ready to take the risk, then only you should suggest for this. There could be few interpretation issues also. The best example can be the solar panel works contract. You know that there are advance ruling in case of the same assessee. So there is one state wherein it has been held that it is subject to 5%. There is another state wherein it has been held that it is subject to 18%. So if you do the audit of this assessee, so what is the view which you are going to take? Will you say that it is subject to 5% or will you say that it is subject to 18%? So in such cases, to rely, there can be a expert opinion. So as an auditor, you can say that either you can take the expert opinion or you can ask the auditee to take the expert opinion to decide on this matter, which you can rely upon, if you think that you can't decide on the final rate of tax. Part B. This is a certification. Again here there are two parts. The first part is applicable when the reconciliation statement is drawn up by a person who has done the audit. The second part is applicable when the reconciliation statement is drawn up by a person who has not done the audit. Here the confusion starts. Now, in this first part, it says who has conducted the audit. Is it audit under GST law or any other law? On what basis you are answering this?
Some amount is already audited by the company set. And it's already been audited by next person. Tax.
Logic seems to be okay. Logic seems to be okay. But this is not supported by the GST law. We understood what is the meaning of audit. So where are we finding this word audit? So we are finding this in the 9C format, which is issued under GST law. So what is the meaning of the audit? It is verification or examination of the records which are maintained under GST law, and for that audit we have special section 35(5). So is it saying 35(5) audit can be by one person who can do the 9C reconciliation also, and it is giving option for other auditor to do only reconciliation without audit. So this confusion is even more increased with this recent clarification. So the recent clarification says the role of the professional, it could be a chartered accountant or it could be a cost accountant, is limited to reconciliation of the values between annual returns and the financial statements. So should I do the audit or not under GST law? So one meaning is, as sir said, the audit is done under other law. Say there is an audit under Companies Act. Now I am doing GSTR 9C audit. 17-18 companies act audit would have been over. So can I assume that this audit is already over? So now I have been appointed to draw only reconciliation statement, which is only reconciling the values, and I will issue the certificate in part 2. Can I do this? This is the confusion which is there. We'll see the form to see whether we'll get some clue or answer for this question. The first part is certification in cases where reconciliation statement is drawn up by a person who had conducted the audit. We will assume that this is an audit under other law. This assumption can be based on the contents of this form. It says, I have examined the balance sheet. I have examined the profit and loss account. Cash flow statement. So based on this, as sir was mentioning, maybe we can interpret that the first part is applicable when the audit is done under any other law, and I am doing the 9C. If I have not done the audit under any other law, then I am supposed to do, or I am supposed to use the second part of the certification. Again, their confusion, as I said, is should I do only reconciliation or should I do audit plus reconciliation?
Similar to income tax audit, 3C and 3C.
Sir, the main difference is if you see income tax form, form 3CD,
3CA and 3CB.
no, the main form is 3CD.
3CE.
Okay. If you see 3CD, there are a lot of questions, correct? And it is very specific. It makes it very specific to verifying those aspects. But the form in GSTR 9C is not designed properly. A lot of issues. Anyway, first we'll understand this form. It says, the first part, I have examined the balance sheet as on so and so date, profit and loss account and expenditure account, cash flow statement for the period beginning from and ending on of so and so, attached herewith. So it says attached herewith. So the first question is, should I attach this profit and loss account, balance sheet and cash flow statement for each registration? If you see, there is a registration number which they are asking. The answer is obvious no, because we can't do that. Correct? We can't do that. Maybe maximum we can prepare a trial balance and give it. I don't think we can prepare cash flow statement for each registration. Second part, based on our audit, we report that the said person has maintained the books of accounts, records, documents as required under GST law, or has not maintained the following records under GST law. So this is where, as an auditor, we should mention whether all the records which we discussed under section 35 and rule 56, 57 and 58 are maintained or not. There is a specific requirement for us to mention this. Next is, we report the following observations, comments, discrepancies, inconsistencies, if any, in relation to the records which are maintained under GST law. 3B, we have obtained all the information and explanation to the best of our knowledge. C, not very important. 4, 5, in my opinion, and to the best of my information and according to the explanation given to me or us, the particulars given in the said form 9C is true and correct, subject to following observations or qualifications. It says true and correct. So if we assume that our role is not limited to only reconciling the value, but it extends even beyond that, we have to do even the audit, then here we should make our observations and qualifications. Signature, it is very clear. Second part, so second part says that if the audit is done by the other chartered accountant who has not done the audit under any other law, it says that I have relied on the report of the audit done by so and so chartered accountant. Otherwise the contents are more or less same. It also says that the information in 9C is true and correct, subject to following observations of the qualifications. So this is the main form. First part, it is very clear. It says financial year, GST and legal name, trade name, are you liable to audit under any other law? It can be income tax law or can there be a situation wherein I am not supposed to get the audit done under any other law, but audit under GST law is required? Can there be a situation? Yes?
Yes,
Example?
turnover may be someone, under taxable 44A audit, it nearly 2 crores, where they are not get the audit, but exempted and other turnover is considered, it crosses 2 crores, that time it is applicable.
Yes, perfect. The main difference would be your stock transfer, correct? Say you have two branches. There is one manufacturing entity in your Pune location and you have a trading location in Chennai. Stock transfer. So stock transfer is not considered as your turnover for the financial statement, but whereas for GST returns you consider it as a turnover. So you have to see these 2 crores as per GST law, not only based on the financial statement, right? So in this cases what happens? Because if you see the second part, it says reconciliation of turnover declared in the audited annual financial statements. So if the audit is not required under any other law, can I say that GST audit is also not required? The answer is clear no. Maybe in his observation the auditor can mention that the audit is not required under any other law, so we have done the audit based on the financial statements or the income and expenditure statements prepared by the taxpayer or the assessor. Second part 2. So this is where our reconciliation work starts. So as I said, first we will reconcile the gross turnover, then we will reconcile the taxable turnover, then we will reconcile the taxes paid and input tax credit. So first to reconcile the gross turnover, we have to start with the turnover which has been provided in the financial statement. It is the total turnover in your profit and loss account. It could have operating income, it could have non-operating income. Example, your dividend income, interest on bank, sale of scrap, there could be many other things. Discount received. So all this, you have to take the total amount to this 5A column. Then we should reconcile by adding or subtracting the amounts to match it with the turnover which I have declared in my GST annual return. Can there be a difference between GST returns and financial statements? Yes. What can be the reasons?
Unbilled revenue.
Unbilled revenue. Yeah, you have the answer there itself. The reason could be unbilled revenue, the reason could be stock transfer, the reason could be credit notes. Correct? There are certain conditions in GST law to take deduction towards credit note. But in financial statement, I don't have to have any reason. Correct? If the customer doesn't pay, I will account it as a deduction. Correct? So there are various reasons for which there can be a difference. There are certain adjustments or the reasons which has been identified in the form itself. We have to see if there are any of these reasons applicable to us. If yes, do additions or subtraction. If it is not covered in this, then there is a residual entry. In that residual entry, we will make a adjustment for unstated reason in this format. Unbilled revenue, at the beginning of the financial year, I have to add it. Why I am adding this? Unbilled revenue at the beginning of the year. So if you are doing 17-18 audit, which year they are talking about? Unbilled revenue. 16-17, correct? So what happens is in 16-17 you have done some unbilled revenue recognition. Why do we do unbilled revenue recognition? It is to meet the requirement of our accounting standard. Mainly in case of service industries you will find this, AMC companies or software companies. Having this unbilled revenue is very common, right? We have to see is there any unbilled revenue on which we are paying GST in 2017-18. If we have such income wherein I have recognized this income as unbilled revenue in 16-17 but I am paying GST in 17-18, then I should adjust this, because my 17-18 turnover will not have this as the turnover. Unadjusted advances at the end of the financial year. So what they are talking is, if there are any advances on which I have not issued the GST invoice in 17-18, I have to add it, because in my financial statement I don't show my advances as turnover, right? It will be in current liabilities. Deemed supply under Schedule 1. What is deemed supply under Schedule 1? Without? Yes. Examples? Permanent transfer of fixed asset, transactions between related party which can cover even your stock transfer, import of service from related parties without consideration. Correct? So these are all the supplies wherein there is a liability to discharge GST but not considered as turnover in our financial statement because there is a absence of turnover. Credit note issued after end of the financial year but reflected in the annual turnover. So these cases are very less. What are they saying is that say 17-18 is the audit period. I have issued a credit note which is dated April 25th, 2018. And I have claimed deduction towards this credit note in my annual turnover. So they are saying you mention that credit note here and take deduction from the turnover. Next is trade discounts accounted in audited financial statement but not allowed in GST law. There are certain conditions to take deduction towards discounts in GST law, right? What are the conditions? Come on, you have to answer. You are doing GST audit. You can't say you don't know. Or is it that you are not answering because you are not getting CPA credit? Yes, sir. Please try. What are the conditions? Yes.
Condition should be before sale.
Yeah. The first condition is to allow something as a deduction, there has to be a agreement before sale or at the time of sale. It cannot be post supply. Agreement. Yes. Next is I should be able to link it to a particular invoice. The next condition is the recipient should reverse the input tax credit. Say my invoice value is 1000 rupees. I have told the customer that if you pay me within 1 month, I will give you 10% discount. So there is an agreement before supply itself. So now I am going to issue a credit note for 10%, which is 100 rupees plus GST of 18 rupees. Now to claim this 18 rupees as a deduction from my liability, one condition I have satisfied. The next condition is in the credit note I should be able to link the invoice against which I am giving this 10% discount. So I have issued invoice number 1. So I will say that in the credit note, discount against invoice number 1, 10% as agreed in the agreement, so on so. The next condition is again how to check is an important question here for which I don't have the answer. The next condition is the recipient should have reversed the input tax credit. If we had the matching concept, the GSTR 1, GSTR 2 and GSTR 3, it would have been easy. Because we don't have GSTR 2 and 3, it is not possible for us to verify whether my customer has reversed the input tax credit or not. And we need not go beyond the books of accounts to see whether the third condition is satisfied or not. If as an auditor I find that there is a discount wherein I have not satisfied the condition, then I will mention that amount here. Simple.
So once a credit note is issued, automatically the recipient has to reverse.
Correct, sir, that is law. Now, how can you check? See, they are saying you can take the deduction towards this if the other person automatically has reversed the credit. But how do you check whether automatically he has reversed the credit or not?
No, credit note when he gives, supplier, automatically recipient has to account the credit note.
Correct, sir. The issue is, in the same example, I have issued an invoice for 1000 rupees, 180 rupees is the credit. You have taken the credit of 180 rupees. Now I am giving you a discount of 10%, 100 plus 18%. Now, how will I make sure that you have reversed this 18 rupees from 180 rupees? You are saying he has to do that. That is the law. But how will you ensure it has been actually done or not? So this is the problem. You are saying something, madam? thought she's lifting the hand. Whatever discussed, almost everything is discussed in these slides. What should be added, what should not be added, all this are there. Turnover for the period April 17 to June 17, we should deduct or add? Add, minus symbol is there. Why are we deducting this? Because we did not have GSTR at that time. Simple. One more clarification. Say my turnover for 2017-18 is 2.5 lakhs. The turnover 2.5 crores here. First 3 months my turnover is 75 lakhs. Should I get the audit done?
Yes.
Yes?
Yes.
There is a recent clarification, as I mentioned, press release wherein they have clarified the role of auditor. They have also clarified that the turnover should be only for July 17 to March 18. If you have told somebody that even you should get the audit done and agreed for it, you have to relook at it. Unbilled revenue at the end of the financial year, we are going to reduce it because we won't have paid GST on that. Yes, sir.
I have a question on turnover from April to June. In case of real estate sector, how will I determine the turnover from April to June?
It is a very big question in simple words. You have to see the financial statements. Simple.
No, but I cannot determine the 3-month turnover because at the year end I will compute the percentage.
See, you have to take this turnover maybe from your VAT returns. There will be a VAT returns. There will be a service tax returns wherein they would have declared some amount as a turnover for this period. So you can consider that. Plus, you should also consider the transitional provision, section 142(11). Therein certain conditions are there wherein they had said that certain amount you need to consider as GST turnover with certain conditions. So you have to see these returns plus financial statements, what is it they have appointed, plus the transitional provision section 142(11).
But I have a concern because my valuation methodology is different in VAT and services.
No, to address this only, they have given this transition provision section 142(11). You read that, you will get your answer. 2 weekends out.
I have a question.
Yes.
This turnover in the previous slide which we discussed, you mentioned that we can take all the credits, I think, and go ahead.
Yeah.
Wouldn't there be a mismatch again with the income tax turnover which we'll be taking? For say, let's assume 44 AD and all. So what
There
will
will
be
be
the
difference. I will cover. Yeah. Credit notes accounted in the annual financial statements but are not permissible under GST law. So we have discussed the conditions, and there is one more condition for credit note. What is it? If it is a discount, we discuss the conditions. It has to be agreed prior to supply, then there has to be a linking to invoice, and there has to be a reversal of credit. So what can be the reason for which I issue credit note?
Reduction in invoice value. Reduction in invoice value.
Deduction in invoice value, yes.
Reduction in rate difference.
Rate difference.
Rejections.
Rejections or the sales returns, correct? What is the condition for sales returns?
Within 6 months.
Is there a time limit?
No, there is no time limit.
There is no time limit. See, time limit in GST law is September end for the previous financial year. So 17-18 you have made a sale. The customer is returning you the goods by September 30th, 2018. You can issue the credit note, you can take the deduction towards the taxes which you had paid earlier. The customer is returning the goods on October 1st, 2018. You can't claim the deduction because the time limit for issue of credit note toward these reasons. It can be a return of the goods, it can be deficiency in the service, it can be a change in the taxable value, or it can be change in the tax rate. The time limit is September 30th. If there is any return after this date, then I can't claim the deduction from my GST turnover. then is there any planning which I can do in this case? The answer is yes. What I should do is, instead of telling him that you return the goods against credit note, I will ask him to sell it to me, so that this condition will not happen. Adjustment on account of supplies of goods by SEZ unit to DTA units. So this is applicable only for SEZ units. Being a SEZ unit, if I am supplying goods to DTA, I will reduce this turnover. Why? Why? Because as an SEZ unit, if I am supplying goods to DTA, I will not pay GST. It is not my liability. It is always the customer's liability. When I procure the goods from SEZ, I should treat it as import and I should pay the taxes. Treating it as imports. Turnover for the period under composition scheme, I have to reduce it. Adjustment in turnover under section 15 and rules made thereunder. What is section 15? What is it about?
Transaction value.
Valuation. Mainly about valuation, not restricted to transaction value. Can there be a difference in valuation as per GST law and financial statements? Answer is yes, otherwise they won't have given this. What can be the reason? One example. Whenever I need rest, I will ask you one question and I will keep quiet because you will not answer first.
Sale to distinct person.
Sale to?
Distinct person. It's relative.
Distinct, yes. That is one example. Another example can be your, if you are into construction business, there was a different valuation, right? What was the valuation for GST? If I am billing 1,000 rupees, should I pay GST on entire 1,000? Is there a deduction? Yes, somebody mentioned. Land value, right? So there was a deduction toward land value. 1/3 of the value I could have claimed it as deduction towards land value. Will I account 2/3 of the value as my turnover in my financial statement? The answer is no. I will account 1,000 rupees as my turnover in financial statement, whereas in my GST return I will account 667 rupees as my GST turnover. So there is a difference of 333 rupees. So here what I will do? Add or deduct? I will deduct. Remember, I have taken financial statement figure as the basis. I have taken 1,000 as the basis. Now I have 667 in my GST return. So 1,000 minus 333, I will get 667 as a taxable turnover. Related party. So I have a related company. So I will bill 100 rupees as against general market value of 150 rupees. For my GST records, I should have 150. But for my financial statement, I will have 100 rupees. To address this, what I will do, I will add 50 rupees to my financial statement. Similarly, there can be an adjustment in case of turnover due to foreign exchange fluctuation. What can be the example? There is no participation from last maybe 1, 2, 3, 4 rows.
Billing date and
Sorry?
difference between the rate of billing and the receipt of amount.
Yeah, rate of exchange can be different. What is the rate of exchange for goods as per GST law? If I am exporting the goods, so CBIC rate. For accounting, which rate I will take? SBA or RBA or general rate, correct? So there can be a difference. In GST return, I have CBIC rate. Say the rate is 70, whereas RBA rate is 71. So there is a difference in the turnover. So to match this, I will do plus or minus according to this difference. Next, can there be any other reason for which there can be a difference, which is not listed here?
Sale of fixed assets.
Yes, sale of fixed asset can be one reason. Interest income. You asked a question, right? So there can be various other reasons also for which there can be a difference between income tax returns and GST records. So all these reasons I can put it in 5O. Yeah. No, deemed supply there is a specific heading. If it is under schedule.
180 days.
180 days can come here. You have a interest income. You have dividend income. So all this you can show it in 5O. Say your turnover is 1000 plus 10 rupees. So 1000 is your operating income, 10 rupees is your dividend income and interest income. So you have started with 1000. Say you don't have any of this adjustment. You have 1000, but 1010 rupees as your turnover. But in your GST records you have 1000. To match this, what you will do? 1000 minus 10. So this 10 you will reduce in column O. For this I have to give my reason. So I have reduced rupees 10 towards dividend income, interest income, or whatever is the reason. Don't use this for expediting your 9C process. Say the audit will come on 25th August. You don't want to say no to him. So the turnover as per financial statement is 10 crores. As per return it is 9.9 lakhs, 9.9 crores. We will say 10 crores, 10 lakhs in 5O, match it with GST returns. You should not do that.
What are the consequences
Consequence
of this?
not doing your duties diligently.
Not notified.
No, as per GST law, if you ask me, there is no consequence. But as per ICI guidelines, you have not done your duties diligently.
If they reject the audit report,
No, they can't reject, sir. They won't reject. Yes, sir.
so these are the adjustments to arrive at the taxable turnover that is GST.
Gross turnover, not taxable.
Yeah, but now we are arriving at the P form. Annual turnover P.
Annual turnover after adjustment as above, which is automatically calculated. Next, what it does is it compares with your gross turnover as per annual return, not taxable turnover.
Yeah, and my question is that first of all there is so many issues whether this is taxable or not. Again that issue comes. So with these differences come, like example I told sale of car is very important, or there is a credit notes in the P&L account, like quantity discount, scheme discount, incentive issues. These are like no GST effect is taken in the since you added the gross turnover 0.5 year. Now with this the part of the exemptions are not like there is a legal side difference.
Sir, what you have to do is, you have to see whether you can adjust this. As I said, we have to take the total turnover as per the financial statement. So start with that. See whether you can adjust that by deducting or adding it in any of the specific columns. If you don't have any specific column, you go to O. So you took the example of say quantity discounts or some other discounts where there is no effect of GST. So what you can do is, if you have treated it as your turnover and it has come to 5A, either you can show it as, there was a column for discount, trade discounts. You want me to go to that sheet? So you can show that. If it is not possible, then you can show it in 5O.
But you told there's a condition for the discounts. Will this be service that there is no GST effect on this acceptability or it is reversal on the trading discount?
So it is a different subject. We are going beyond 9C. To answer your question, there is a circular also. Very recently there is a circular on this discounts. You can refer to the discount where they have clearly clarified when it is taxable, when it is not taxable. Because there are certain discounts which are in the disguise of income. If it is an income, then GST has to be paid. So there was, especially in case of this trading community, if you take the example of this automobile dealer, there are a lot of incomes which they are calling it as discounts. So there is a tax impact. So you have to refer to this circular. Last month there was a circular. Yeah. What we have done is, we have reconciled the gross turnover, which includes exempted turnover as well as taxable income, including your export turnover. Match it with your annual return. Can there be a difference? The answer is yes, unless you have used your 5O very effectively, there can be a differences. So for the differences, we need to ascertain the reasons, and I have to mention the reason for such differences. One example can be, say there is a taxable turnover of 100 rupees. I have not taken it as my taxable turnover in my annual return. As an auditor, I feel that it is subject to tax. I am very clear that GST has to be paid on this. Then I will show this as the difference, and I will say that There is a turnover of 100 rupees on which GST has not been paid. Again, remember, there are two views. One is pure reconciliation of values. The another view is reconciliation with audit. So it is left to us as an auditor, as a chartered accountant, what is that I want to believe in. Will I believe that it has to be audit plus reconciliation, or will I believe that just it is a reconciliation exercise? This we need to decide. If you go by the technical weight of the institute, it says that we have to do thorough check, which is audit plus reconciliation. After reconciliation of the gross turnover, now we have to do reconciliation of the taxable turnover. So we'll take the total turnover which you have got, then reduce the exempted income, nil rated income, non-GST supplies, no supply turnover. What else we have to reduce? Next is zero rated supply. What is zero rated supply? Exports and SEZ supplies. Wherever I have not paid GST. I can make the export on payment of taxes or without payment of taxes, correct? Both options are there. If I want to go for refund, I will pay tax and export the goods. That is also possible. Here, what we have to reduce is the exports on which I have not paid the taxes. Supplies on which tax is to be paid by the recipient on reverse charge basis. Are they talking about our income or the expenditure? Income. We are logistics, so when they are filing their 9C, they will show certain turnover under this heading, because on certain turnover their customers are supposed to pay the taxes under reverse charge. It is not our expense, it is the income part. If you are providing any service on which customer is supposed to pay tax, then only I mention this. Otherwise, generally this is not applicable. After all the adjustment, I will get the taxable turnover which I have to reconcile with the turnover which I have declared in my annual return. Can there be a difference? The answer is yes or no, depending on how much compliant is the SSC. And next is value of exempted turnover, nil rated. So in all these cases, I should also see whether the conditions related to these exemptions. There can be conditions which are attached to this. For example, education institution. So it says that only up to PUC you can get an exemption on transportation service. So I have to see, is it up to PUC, or is there a service which has been given for degree students also. So these are the conditions which I have to see as an auditor. It should not be, I believe that it should not be limited only to reconciling the value between these two, financial statements and annual returns. We have covered the major part, which is the turnover. So next is reconciliation of taxes paid. If you see till now, we have covered the taxes payable on the income part. We also pay tax under reverse charge rate, so we have to show that somewhere. So there is no separate reconciliation which has been provided for this, so that it is getting covered in part 3, wherein we have to mention what is the value of outward supply on which I have to pay taxes under different rates of taxes. I have all possible rates. And if you see B, if you see column D, it says RC. What is RC? So here I have to mention the value on which I am supposed to pay the tax under reverse charge at the rate of 5%. Column D, I will mention the taxes which is payable at the rate of 12%. Next is interest, late fee, penalty. So it says penalty. So as an auditor, should I quantify penalty? What do you think? You will not? We can't also.
It's all in grey box.
No, grey means you can't mention the taxable value.
No, can you fill that values?
No, you should not fill that there. You have to fill that value in 3, 4, 5, 6. 3, 4. Say there is a IGST supply. There is a penalty relating to that IGST supply. You mention that penalty. Now the first question is, as an auditor, should I quantify the penalty? The answer may be no. If I am given the option, if I am doing the certification, I will not quantify. The reason is very simple, I can't quantify. So we took the example of this payment voucher or receipt voucher, correct? Say there are 100 vouchers which has not been done. So should I quantify it as 100 into 50? He will not pay my fees. Correct? So I will say it is up to the assessing officer to assess the penalty which is payable. In my comments I will mention that penalties could not be quantified. Then I can mention that. If I already paid the penalty, I mention that.
What about the interest?
Interest, I think we should quantify. So there can be certain reasons wherein I can't quantify. The best example is delay in filing your returns. We are supposed to file our return on 20th, but we are filing on 25th. So the big question which is there is, should I pay interest for this balance 5 days? Say I have sufficient input tax credit to adjust my liability. I don't have cash payment. And most of you must be knowing that there is a proposal that the interest levy is going to be on the cash payment, the net amount after adjusting the ITC amount. So, being in this scenario, should I suggest interest payment? I feel that the answer is no. If there is a complete cash payment and I am very clear that the interest is supposed to be paid, then I quantify and I report it in this column. Again, I will compare these taxes paid as per financial statements with annual return. If there is a difference, I will give the reason along with the amount which has to be paid. Table 11, additional amount payable but not paid. If there is a difference between these two, then I have to identify the values along with the rates at which the taxes needs to be paid, and I mention the amounts. The important point to be noted here is to be paid through cash. If you see above this table, column 4 and 5, it says taxes to be paid through cash. Any differential amount has to be paid in cash, even though I have sufficient credit. What do you think the reason is? Huh? Why I am not being allowed to utilize credit?
Because you cannot use this statement to take ITC.
No. Say I am a software exporter. I have lot of credits. Say I have credit of 1 crore rupees from the day 1. I have transition credit of 1 crore and GST credit of around 50 lakhs. So my total credit is 1 crore 50 lakhs. I don't have any liability. Now as an auditor, I find that there is a sale of one fixed asset. There is a sale of car on which tax of 50,000 rupees has to be paid. Now what is your answer? So why I am not being allowed to utilize this 1.5 crore as the credit?
The refund would have been made.
Because this is only a statement, not a return.
No. The reason is, who is quantifying or who is assessing this additional tax payable? Assessee or auditor?
Auditor.
Auditor, right? The input tax credit, if you refer to section 41 subsection 2, it says that input tax credit can be used for payment of self-assessed tax. What do you mean by self-assessed tax? Who should assess it? Auditee or auditor? Auditee, right? So this is being assessed by the auditor. So this is the reason for which they are not allowing you to utilize the credit for paying any taxes which are arising as a result of this audit. You can ask me one more question. So GSTR 9, who is doing GSTR 9?
Auditee.
Auditee. So there also if you see, they are saying you have to pay it in cash. If you ask me the logic for that, I don't have the answer. That may not hold good as well. Next is reconciliation of input tax credit. So similar method. The main challenge will be wherever we have multi-location units. So there we are going to face lot of challenges, because in this 9C, 90% is getting the data from the auditee. 10% 10% is understanding and filling this form, especially if it is multi-location units. So that's why I said we have to start from reconciliation. So here we are facing a lot of challenges in getting this information because it has to be registration wise. We'll see the adjustment. So 12A we have to start with input tax credit as per financial statements. Then the adjustment is ITC booked in earlier financial year. So for 17-18 the example for filling this column can be your transitional credit. So you have taken VAT credit, service tax credit or central excise duty credit which are accounted in previous year, but you have taken it as transitional credit and utilizing in GST regime. So that amount you can add it here. ITC booked in current financial year to be claimed in subsequent financial year, especially your year-end transaction. Say you have made certain purchase entries in your books as on 31st March, but you actually received the goods on 1st April or 2nd April 2018. So as per GST law, you are supposed to take the input tax credit in 18-19, but you have accounted that credit in your financial statement for 17-18. So that you are going to reduce so that it matches with your GST annual return credit. Simple. After this, there is a bigger exercise. Master reconciliation statement. Yes, sir.
Actually, while transition, so our clients we know by taking the income tax credit, we go double. 5 lakhs was the income tax credit in VAT as well as excise. So while filing the returns, it was go double. In that case, how to disclose? So subsequently, we got reversed that.
It has been reversed, is it?
Yeah, reversed out by showing it as a.
Okay, if it is already reversed, you take only 5 lakhs here.
Net figure.
Yes, net figure you should take. But you have to make sure that it has been reversed. Yeah, master reconciliation statement. Reconciliation of ITC declared in your annual return with ITC availed on expenses as per audited financial statements. So what is it saying? That you have to see the credit relating to these expenditures. Reconcile with your annual returns. One of the instructions is that irrespective of whether you have taken input tax credit or not. Example, rent-a-cab service. Can we take credit on rent-a-cab service? Yes or no? No. General answer is no unless you are into the same business. Correct? I am a chartered accountant, so if I receive a rent-a-cab service, I can't take the input tax credit. Now what they are saying is, in my financial statement, I would have expensed of entire amount, 1000 plus 50 rupees, 5% is the GST rate. So 1050 rupees would have been the amount which I have expensed of in the financial statement. Now the instruction says, even that amount you should reconcile. So you should mention 1000 rupees rent-a-cab service, 50 rupees is the amount of ITC column 3, amount of eligible ITC availed column 4 will be 0. To this extent they wanted the reconciliation, but luckily there is a recent clarification. You should go through this recent clarification. Press release dated 3rd July 2019. So here they are saying that the requirement is to reconcile only those expenditure wherein input tax credit has been availed. So in my example, rent-a-cab service, you don't have to reconcile. Mainly you should go from annual return to financial statements for this purpose. So they have identified certain expenditures: purchase, freight, import, employees cost, conveyance. Similar to 5O, what was 5O? Residual entry, others. So you have 14 yen. Other miscellaneous expenses. One more important point is, there are certain expenditure, for example professional services or legal charges. These are the example which have not been listed in this expenditure. It doesn't mean that we should not disclose that. We can add certain entries into this. If you see the P and Q, any other expense, I think presently the form is allowing us to add 3 or 4 lines, right? So we can add 4 entries into that, and we can mention what is the expenditure amount and what is the credits involved in that, so that it matches with the annual return. If it is a multi-locational unit, I don't know how we are going to do this reconciliation. Audit fee for Karnataka unit, audit fee for Tamil Nadu unit, audit fee for Kerala unit. This is how we should give the reconciliation. Table 16, this is a tax payable due to non-reconciliation of input tax credit. If there is any amount payable, say the auditor, as an auditor, I find that there are certain expenditures, say rental cab surveys, they are not supposed to take the credit, but they have taken the input tax credit. Then I mention the amount of, say, 1 lakh rupees is the amount which has to be paid along with the interest. Next is auditor's recommendation on additional liability due to non-reconciliation. So this is the table. If you see here also, they are mentioned to be paid through cash. Why? The reason is very simple. The taxes are being assessed by the auditor. It is not self-assessed tax. So here the auditor can mention the additional liability which he feels that should be paid by the taxable person. If you see table number 11, table number 11 is difference between the taxes paid as per annual return and financial statement. So those amounts and the amounts which can be mentioned in part 5 can be more or less same. Both are as a result of non-reconciliation. So that's why I said there are certain defects in the form.
So interest, late fee and penalty, the value has to be entered.
You can mention in certain cases. Late fee you can't mention the value. Interest you can mention the value. So wherever it is applicable you mention the value. Similar to 5O, similar to 14N, even auditor has got residual entry, which is any other amount paid for supplies not included in annual return. Yes, sir.
In part 4, where we have expense on ITC.
Part? Okay, you are talking about the table 14.
If I have a transitional credit, how will I show that?
Good question. Maybe we should use that for additional entries which I can use.
But what will I show in the value column?
You can mention, say what is the, you see what is the credit amount. Against that you mention what is the back calculation you do. In the reasoning you mention that this is a transition of credit. Because I can't mention the value, this has been back calculated and this is the value which I have taken only for this purpose. Because if you see, what is getting reconciled finally is only the last column. The taxable values or the ITC amount as per invoice is not getting reconciled, only last column. ITC amount is what we have to reconcile.
But will it not amount to misdeclaration?
No, I am saying you mentioned the reason also. If you see table 15, you can write whatever you want. I mean related to GST 9C. Here you can mention for this row number, say row number Q, transitional credit, we have mentioned 1 lakh as the taxable value, which is done after calculating the value because we don't have the actual value. You can mention that as a remarks.
Table 15 comes into picture only if there is a difference in 14T.
You try filling it, even though there is no difference, you can fill that. There are a lot of defects in the form, sir. So we use whatever information is available. Yeah. Erroneous refund to be paid back. Outstanding demands to be settled. Here we have to be very careful. Outstanding demand means it doesn't mean that if I got a show cause notice, as an auditor I will mention that whatever amount mentioned in the show cause notice is the outstanding demand. It is not so. It is only those demands which the assessee has agreed to pay and he is not appealing. If he is appealing against a particular order, then we don't have to mention that value. It is only the confirmed demands is what we need to mention. Next is verification. I hereby solemnly affirm and declare that the information given here above is true and correct to the best of my knowledge and belief, and nothing has been concealed. Very dangerous statement. It says true and correct. How will you ensure it is true and correct? Can you check 100% transactions? The answer is clear no. I think even your income tax form also uses similar words, right? It also says true and correct. And nothing has been concealed. Concealed means nothing has been hidden. How can you ensure nothing is hidden? Deemed supplies. Say there are multi-location units. We have a head office in Bangalore. We have a branch in Hyderabad. So we may be giving a lot of services to our Hyderabad branch, right? So if you come to do audit of our books, so how will you find that nothing has been concealed? I will say nothing has been provided. How will you prove that? So it is very dangerous.
That should be mentioned if any order is received.
Any order?
Any order is received mentioning that so much of liability is paid.
Not required. I think in your GSTR 9 you have the specific column wherein you will mention this, right? Amount rejected as per order, only in case of refunds, right? You see, I think they only have to mention, otherwise you don't have to mention. Next is verification by registered person. This is recently added. When I say recently, in December they have added. I think they got some doubts on the assesses. I hereby solemnly affirm and declare that I am uploading the reconciliation statement in 9C prepared and duly signed by the auditor, and nothing has been tampered or altered by me in this statement. So 9C statement I will give with a liability of 1 lakh rupees because it has to be uploaded with the SSC. The job of the auditor is sign it with a digital signature and generate this JSON file and give it to SSC. SSC is the person who has to upload this form. So while uploading this form, I will tamper 1 lakh, I will reduce 1 0, I will make it 10,000 rupees. I should not do that. That is what they are saying. I don't know whether really I can tamper with this information, but in India we can do anything, right? I am also uploading other statement. There is nothing to say in this. Some of the best practices, documentation. As we understood, we have to certify that the information is true and correct and nothing has been concealed. Here we have to take care of the documentation to prove that I have done my duty as an auditor diligently. How will I prove that? It can be done only with a proper documentation. Before accepting any audit, before looking at the face, first see what is the risk involved. Also tell the auditee what is that you are going to do. Are you going to follow the philosophy of doing only reconciliation, or are you going to follow the philosophy of doing audit plus reconciliation? If you believe that as a chartered accountant we must be doing audit plus reconciliation, then you should make it very clear to the SSC that if I find any liabilities or non-compliances, I will be very strict and I am going to report it. Otherwise what happens? You will say, okay, I will do the audit. At the time of reporting you will report, then auditee will not be happy. He will say, I will not pay the fee, so all these issues will come up. So make it very clear in your offer itself and in all your communication that I want to help you to be a compliant assessee, and I want you to comply, wherein I am going to report all the liabilities, maybe at the time of annual return, wherein you can discharge all the liabilities so that there can be no qualification in 9C. Correct? There are a lot of advantages of not having any qualifications in 9C. Engagement letter, appointment letter, I think all of us know it. Management representation letter is very, very key in 9C. Why? Because it is true and correct is what they are expecting. One example which I took is services from Bangalore head office to Hyderabad branch. How will you ensure? You can't check that. Maybe in your management representation letter, you will take a declaration from the management stating that we have paid taxes on all the services which we have provided, which is covered in Schedule 1. We have provided all the information about the services or the supplies which are made under Schedule 1, and nothing has been considered. So this can be one entry in your management representation letter. What I suggest is refer to the format which has been given in technical guide. It is very exhaustive. I did not find anything which can be added to the list which is already there. It is covering all the points. So ensure that you use that technical guide format. There can be many entries which may not be applicable for your auditing. So those entries can be deleted and you can use it and get it signed by the management. Again, it is not that you will not collect any evidences for the non-compliance. It should not happen that you will ask your auditor to mention everything that I am 100% compliance in GST law, therefore I have not got any evidence. That is not the way. If you find any non-compliances, then you should find the documentary evidences also should be there. Say for example, the tax rate should be 18%, but he has considered only 5%. You should collect few invoices wherein 5% tax has been charged. Limit the audit to the scope of audit as needed under GST provisions. We need not go beyond the books of accounts. Again, example can be your deemed supply. You don't have to do investigation to find whether any deemed supplies are there. You will go through financial statements and the records which are available, and you will take the MRL. You don't have to do anything beyond this. We have to increase the sample size. We can't say that because the audit can be only on the basis of sampling, we can't take 10% as a sampling basis. If you are doing 50% sampling for general audits like internal audits, maybe we have to increase the sample size depending on the risk which are involved. It is very important to have the audit program and audit checklist, because even the assistants can be clear what should be the scope and what is the extent of verification which can be done. There is a sample program which has been attached at the end of this slide. Is this PPT is going to be shared with you? It will be shared, right? Okay. If you click on that link, you will get that program. Maybe you have to customize this program according to your clientele, depending on the industry you are doing the audit. Ensure that you follow all our important auditing standards like 620, relying upon the work of the experts, sampling, documentation, and it is very important to have list of the common errors which can be there in GST law, especially first year. So we discussed some common errors. Payment which are not raised, or it can be non-payment of taxes under section 9(4), or it can be non-payment of tax on services provided to branches, non-payment of taxes on stock transfer. There can be many reasons for which there can be a non-compliance, and which are very common also as an industry. So maybe we can have a general common list which can be incorporated in your audit checklist or program itself, so that we don't miss on those aspects. So consequence, somebody asked, there is no consequence in GST law, but remember, nowadays courts are looking at the duties of the auditor very strictly. There are few decisions which have wherein it has been held that if auditor is supporting in non-compliance of the auditees, then even auditor will be held guilty, and all this prosecution penalties, everything can be applied on him also. So we have to be very careful nowadays. There can be few challenges in multi-location units. First of all, the challenge will be getting the trial balance for each registration, because we have to reconcile the turnover and input tax credit for each registration. Getting the access to books of accounts. Certain books may be in Hyderabad, but I am doing the audit by visiting head office in Bangalore. So how will I get the access? Then support services could be there which is not declared by the associate. Reconciliation of credits, then checking whether IST mechanism has been followed or not in case of common credits. So these are all the challenges which is going to be there in case of multi-location unit, which we should be mindful. These are the certain issues which need special attention. So these are the issues wherein as an auditor I can't reach a clear conclusion. One example is non-compliance of Rule 42. So what is Rule 42? Take your time.
Reversal of input tax credit on inputs.
It is about reversal of input tax credit when I have taxable supplies and exempt supplies. HSS is high sea sales. What is drop shipment? Your mercantile transaction. So you find a supplier who is in US, you find a customer who is in Australia. You don't get the goods to India at all. This is a drop shipment or mercantile transaction. Do you pay GST on this transaction?
No.
Yes or no?
No.
No. High sea sale, do we pay GST?
No.
No. So can it be exempt supplies? The answer is yes. Very recently, that is from February 2019, they have included this transaction in Schedule 3. What is Schedule 3? List of transactions which would not be considered as either supply of goods or supply of services. And they have also added an explanation in section 17 which specifies the manner in which it has to be done. So Rule 42 is based on section 17. The explanation says that these activities, that is high sea sale and drop shipment or marketing transaction, need not be treated as exempt supply for reversing the input tax credit. Next question is, I am doing the audit for 2017-18. Should I treat it as exempt supplies? Because this explanation has been added only from February 2019. The law doesn't say it is retrospective or prospective. Like this, there are a lot of amendments. So for this, the interpretation can be that it is retrospective. The reason is, this has been clarified through explanation. There are many judgments, including Supreme Court judgment, which says that if there are any explanation which has been added and if it is beneficial to the taxpayer, then it can be interpreted that it is retrospective and need not be prospective. If it is against assessing, then it can be interpreted as prospective. The benefit has to be given to the taxpayer. So here we can interpret that this is retrospective and Rule 42 need not be complied for these transactions. One more confusion, rate of tax. What is the rate of tax for delayed payment of tax? 18%. What is the rate of tax if I have wrongly availed the input tax credit and I want to reverse it now? 24%. On what basis this is 24%?
Section 74.
Intention. No, the answer is not completely correct. The charging section for interest is section 50. Section 50 subsection 2 says that in case of delayed payment the rate of tax is 18%. No doubt in that. Section 50 subsection 3 says that if there is any mismatch of credit as a result of section 4210 or 4310, it is nothing but your GSTR 2 and GSTR 3. If there is a difference because of matching in these two returns, the rate of tax is 24%. Are we filing GSTR 2 and 3? Yes or no?
No.
No, right? Then is this section applicable? Yeah. So we can interpret that there is no section or there is no interest for wrong availment of credit. We can go to this extent also if you really interpret the law. But we need not interpret to that extent, so we will give the benefit of doubt to government also. So my suggestion is, irrespective of whether it is wrong credit or delayed payment of tax, we can suggest to pay 18% interest. Even if department says or courts interpret that the rate of tax should be 24%, There is no interest on interest, right? If you have paid the taxes, even if you pay the interest after 10 years, the interest amount is going to be remain same. Correct? So we can suggest the client to pay 80%. This is what I believe. Next issue is payment of interest on gross or net. So this we have discussed. Again, here also the challenge for us is it retrospective or prospective? And one more important aspect is, as on today, this is not yet effective. This is in finance bill. Finance bill is not passed. Only after finance bill is passed, this rule is going to come, wherein they are saying that the interest has to be paid only on the cash amount, the net amount. Wrong type of tax. I am supposed to pay CGST, SGST, but I have paid IGST. So what will be your recommendation? Will you ask him to pay again? Yes? The answer can be no, because we have section 77 of CGST law, section 19 of IGST law. So these sections, if you refer, it says that if I have paid wrong type of tax, assuming that a particular transaction is interstate supply instead of intrastate supply, intrastate supply instead of interstate supply. If I assumed it wrongly and I have paid wrong type of tax, then I should be given refund of the taxes which I have paid, and I will be asked to pay the correct type of tax. Say import of service. What is the tax which you are supposed to pay? IGST. I have paid CGST, SGST. What should be my recommendation? This section 77 or 19 what we discussed is for taxes collected. If I have outward supply, I have made supplies to Chennai, I was supposed to pay IGST, but I have paid CGST, SGST. So I have these two sections to protect me. I can say it is department who has to assess what is the correct type of supply. Once they give me the refund, I pay the correct type of taxes. Otherwise it is very difficult. Say the liability is 3 crores. So can you ask him to wait for the refund and pay 3 crores now itself? Not possible. And there is no mechanism which has been specified for immediate refund of this amount. If you see the refund application, this is not yet covered. So therefore your suggestion can be wait for the department to identify, wait for the mechanism for refund of this wrongly paid taxes. Then you can suggest them. In case of reverse charge also, you can say that for the purpose of section 9, I will be considered as the person liable to pay the taxes in case of certain expenditure. So I will say that even in case of reverse charge, I should be given the benefit of section 77 or 19. Even if they don't give, what is the revenue implication? Whether I pay CGST, SGST or I pay IGST, it is the local government which is going to get the revenue. So I don't think they are going to question you on that. So we need not recommend for additional liability when it is a wrong type of tax which is paid. Multi-location unit, there could be a issue of taking credits in wrong registration. So there I don't see any difference. It may be required to be reversed, and we don't have a time limit also, right? Because the time limit was September or March, both are expired. Unless we want to rely on this Gujarat decision, we can't take the credit. IST versus cross charge. For this, maybe we should refer to the advanced ruling of Columbia issue. There they have discussed when we should do IST, when we should do cross charge. That can be a good basis. They have good rationale also on differentiating these two. In case of multi-location units, we will have these challenges. ITC on CSR activities. Can I take the credit on CSR activities? Yes or no? Why no? Is it not my business expenditure?
CSR activities is not business.
You are saying as per income tax law. Am I right? For Companies Act also, is it not a business expenditure?
The company is also says corporate social responsibility on the profit. It is not an expenditure.
Okay, is it not relation to business? Because GST law doesn't say that the credit is only on expenditure. GST law says in relation to business. Is it not in relation to business? There is a statutory law which wants me to spend 2% of my profit for CSR. Is it not business? I think that it is business, but here we have to see what are this expenditure. There can be two types of expenditure. One can be supply of goods, another can be services. If it is supply of goods, whether I am eligible to take the credit, the answer is yes, but you will be hit by Schedule 1 first entry. What does it say? What is Schedule 1 first entry? Permanent transfer or disposal of asset wherein input tax credit has been taken. Business expenditure, you take the credit, because you are permanently transferring, you have to pay the GST on that. So effect is same, whether you take credit or not take credit. But in case of services, there is no law in the GST which is restricting us to take the credit. So if it is services which I am using for CSR activity, then I am very confident that credit is eligible. You don't go by advanced rulings because most of the advanced rulings are not correct. Then there will be a lot of schemes, taxation schemes like or sales schemes like buy one get one, or there can be a warranty replacement. So in all these cases we have to be very clear on the tax treatment. So on this also very recently, maybe 2 months ago, there is a circular from the department wherein they have clarified what is the tax treatment on these types of supplies. I'm sure many of you are waiting for this slide. Yes, sir.
Tax treatment when the old laptop has been replaced with new one, the identification
Here you have to see Rule 27.
But what about in case of vehicle is a proprietor?
Vehicle?
Vehicle. Because new vehicle is buying, so he is selling his old vehicle. What should be the implication in case of proprietor? Because he is not.
See, all the assets, there is an option to pay tax only on the margin amount. There is a notification. So you have to see, is there any margin for me? Even though I am treating it as a replacement, I will assign some value to it, right? So I have to see what is that value. So whether this value is more than the value which is there in my books as per income tax records. If there is a margin, only on the margin I will pay the taxes. Yes, sir.
GSTR 2A reconciliation.
2A. We should do.
Comment in audit.
Not record, I don't feel so. Because in GSTR 9C they are not asking about 2A reconciliation. The only place it is there is GSTR 9. So there you will say, based on the amount involved, you will mention the values. I don't think you have to comment on that. It doesn't make any difference. Yes.
So what about e-way?
You
You have to verify the record.
To a certain extent you have to verify, especially when you find that there are stock transfers. Say there are stock transfers, but in GST records they are not paid tax on stock transfers. How will you prove whether there are stock transfers or not? How will you prove? So the document can be delivery challan or you may get e-way bills. So for that limited purpose you will check e-way bill. Otherwise, to see whether they have generated the e-way bill for all transactions where it is crossing 50,000, it is not required. I don't think so. Because it is not covered either in your Rule 56 or 35 or even the format does not cover. I don't think it is required.
Say by mistake they have raised excess e-way bill.
You don't have to cover. There is no revenue loss also. Yes, sir.
Suppose if I have additional liability in GSTR 9, let's say 10,000 liability in GSTR 9, no DRC is not. The same difference I am getting 9C also.
You don't have, ideally you should not get the same difference. say the turnover as per the financial statement is 100. What you have done is you have paid GSTR 90 in your GST return. You will find that there is a 10 rupees on which GST is not paid. You will recommend the assessee to pay the tax on this 10 rupees also. Correct? So you have cleared it. So in 9C, turnover as per financial statement 100, turnover as per annual return is also 100.
But I don't have a provision to set out my DRC 03 in 9C.
You can't. You can't. It is not linked. You have to pay it separately. If they ask you whether you have paid or not, you can tell that it has been paid. That's all.
So if suppose I have missed out few RCM payments and if I make the payment today, what is the stand on input?
My view, not as per GST law. You don't have answer for this in GST law. A reverse charge mechanism can be on two aspects. One is procurement from unregistered person, procurement from registered persons. Correct? If it is from unregistered person, there is a requirement to raise the self-invoice. Say you have identified certain expenditure from unregistered person and you want to pay the tax now. When you raise the self-invoice, backdated or present date?
Backdated.
You should not.
GST 1 will report box.
No, today. See, you are paying the tax this month. 17-18 you had some liability. You are paying now. So can you raise self-invoice backdated putting 17-18? You can't. You should not. So you put today's date. Now what is the document for me to take the credit here? The self-invoice. If you see section 16 for what does it say? It says invoices relating to financial year, the time limit is September of due date of filing the return for September month of subsequent year. So in this case, should I see this as the invoice of 17-18 or should I see this as the invoice of 19-20? I will see as a invoice of 19-20 and I feel that this is the credit which can be claimed now also. The time limit will be next year September. Here the only non-compliance for me is time of supply. When I was supposed to raise the invoice under this? When I was supposed to issue the self-invoice? I don't think any rule or any section is covering this. Time of supply is only to decide the time on which you should pay the tax. It is not to raise the invoice. If you are procuring any services or goods from a registered person wherein there is no requirement to generate the self-invoice, I don't think you have any way out to take the credit.
But in case of unregistered, as we were discussing, in the GSTR 9 or 9C wherever, we will be discharging it through DRC 03. So, and DRC 03 would has a rider that you can't take input of that again. There is no linkage here.
No.
Because I am going to discharge it through DRC 03, it will be covered in 17-18 transaction.
You don't do it through DRC 3.
Okay. Just discharge it today.
You take it as an expenditure of this one. Presently we are in July 2019. You show it as an expenditure of July 19. You pay the interest. You are supposed to pay in July 2017. You are paying now. You pay interest for 2 years. You show it in this month's return. You don't take it as annual return at all. In audit report, if you want, you make a comment stating that there is a reverse charge liability which has been discharged by the auditee by showing it in returns for July 2019. This can be the way.
And for registered taxpayer?
Yeah, I don't have any way out for that. So you will lose that. You have to pay the tax, but you can't take the credit because you don't have the document for the taking the credit. So document will be old date, self-invoice.
Plus one more thing, so there is no linkage like the 9. If I discharge in the next year, there is
No link.
So if something has been discharged next year, I can always take that.
If it is already paid through annual return, in your comments you can mention that the taxes have been discharged through annual return.
In case of input tax credit, suppose if I have done a reversal determining 180 days for the payment to the vendor, in 1920, I have reversed for 1780. Where will I show in GSTR?
Where will you show in GSTR?
9.
9 will take it offline. Anything related to 9C? Because 99% people are waiting to go out. So shall we conclude?
Yes.
I assume and presume that most of you have understood whatever we discussed, and I would like to thank Sir for the opportunity and patient listening, because at least 90% of you have stayed back, irrespective of my comment stating that you may not get CPE. So thank you very much for that.
Friends, cool, calm, decent session today. Thank you very much, Mahadev, for having such a wonderful session for us. A big round of applause to Mahadev. I request Guru Shankar to come forward and present a memento to the speaker, Mahadev, as a token of our appreciation. I think we have got a lot of questions. Maybe we need to have one more session, sir. And it may be preferably a breakfast session instead of an evening session. Please sit.
But you should put a condition that they should ask questions.
Our members will definitely ask
answer
questions.
also.
Yeah. Definitely. Next time we will come out with a lot of questions to you, sir. And on behalf of all my members, I am telling. And we would like to have one more session for that. So thank you very much. Friends, as you know, last month and a half, we are not able to get the CP credit for the Wednesday study circle. Nevertheless, all of you have been present here. That shows and demonstrates that the members in Bangalore are not looking at the CP credit, they want the sessions here. That's what it shows. So, a big round of applause to all of you. And we have been, following up with the CP committee and also the vice president of ICI, asking us to get the CP credit for all our Wednesday study program. The concern is very simple. One of the circulars sent from vice president states that any CP program should be a paid program. It should not be a free program. But for decades, we have been conducting this Wednesday study circle, and it has been free all around. So as a branch, we have taken a decision saying we will not stop the study circle. We will not be charging also. Only thing is at the branch level, whatever program is happening so far, that will continue to happen. CP is not in our hand, it's up to them to decide.
So you charge
We have been collecting today's program, Wednesday study program.
charge nominal fee for the Wednesday program so that it will become paid fee.
Yeah, last year also similar issue happened, and members also commented saying why are you charging? This has been a free program, please fight for that. And we have taken this time last year, we had all that fighting over, and then finally we got the sanction, saying that okay, please continue with the free program. And that has been happening, and this time we said okay, we will continue with the program. All good programs, all top, burning topics are there on the Wednesday study circle, and most of the Wednesday study circles are successful programs like Hallful. Okay, and we are continuing to fight with the head office to get the sanction. Let us see, it depends on what is going to be the final decision. But I'm happy that all of you are present for the Wednesday study circle. Let us continue. We are collecting the signature also and trying to send that. Whereas at some point it may be ratified also. We'll try. Okay, and this month, next month, September, August, and both these months, GST return and IT return and the tax audit. I know all of you are busy. So we thought let us have the sessions in the morning, so that the breakfast sessions we are thinking about 8:30, 9 o'clock. We'll have the sessions, maybe 1 or 2 hour sessions, or not more than 3 hour sessions. Because anyway, once you go to the office before 10 o'clock, nothing will start. Once you go inside the office before 9 o'clock, you are not able to go out. So maybe early morning, no traffic, coming to the branch, having the session in the fresh mind will be useful. So keeping that in mind, next 2 months, so we are, most of the programs will be in the morning time. Note those breakfast meeting sessions and ensure that on that day your alarm is on. Okay. With these words, we would like to conclude today's session. Thank you very much once again, and good night.